So let's say we have an idea for a long on gold, okay? So if we look at the DXY here on the left, we can see that for this period of time, okay, when gold started to taper down its uptrend, DXY started to consolidate here. Then we had this, this section of the price action that, was bearish. Price came down on gold. DXY we had from here to here, let's say, yeah, right over there, a bullish reaction, so the opposite of what was going on gold. So everything, is in accordance, perfect. And then we see that in this period of time, DXY went down, okay, from here to here. Let's actually put it from here to here, okay, so right over here. In the same period of time, gold just consolidated. From here to here, you can see we have this small period of consolidation, but DXY is pushing down. So USD is losing value, is depreciating. Gold is staying stable. So DXY is giving us an insight that price on gold is about to go up, while the price here on gold is actually just not moving and just consolidating. Okay, let's say we also have a fundamental idea that we want to go long, that the Fed is slowing down the hiking of the rates, and that USD is depreciating, gold is going to get bought, and we're looking for a long. Okay, so let's remove the rectangles and see how we would approach the trade at this moment. So let's say we are right here at this current price, and we're looking to enter long on gold. Okay, so we want to build a storyline. We want to build, the technical best setups. We want to use all the characteristics of golds to our advantage, and basically just find the best optimal entry point, have a good risk to reward, and execute our idea. Okay, so for example, first thing I'm going to do, I'm just going to do my fib from the low to the high, from here to here. Okay, I see that I have my 100 EMA here creeping up, just coming up this way. I have my 50 EMA acting as a resistance. If I wanted, I could also, just put lines for the support resistance. So of course I have a support at this area right over here. Then I could say I have, the current resistance here. Let's put it at 58 around here. Then I have another resistance here, finally another one over there. Okay, and is the wick going to be some sort of support? Not really, because now the EMA is above the support, so it's not very important. So now how to find the best possible price? We have multiple options. We have our whole fib over here. We have basically the 38, 50, 61.8, and the 78.6. Okay, all those numbers are interesting. If we look at the psychological level, here at 38, we have the 1745.5. Here we basically have 43.3, so no psychological level. And here the 61, we have the 1740, okay? So from my experience, I would use the 61.8 because this is the best possible price that the market can come back to. We have space from here to the last support, which was here, okay? And we can even, add the possibility of 78 if price action is fast enough. Okay, the only thing I don't like about 78, and why my first instinct was not to look for it, is just because it's below than this support area right over here. You see these candle closes, you see these wicks over here, they're above my 78.6, and by the market going all the way here, it just would show me that the institutions don't have that much intention, that much hurry, that much they're not making that much effort to protect the price. If they really wanted to protect the price, they would limit their retracement to the 61.8, protect those lows, and basically bounce from there. Okay, the 50% is in the middle of nowhere. 38.2, yeah, we can see a pullback with this resistance, but once again, could be a possible price, but it's not the best possible price. And here I'm really looking for that best possible price. Okay, So 78 could be a possibility, but it's not the best possibility. Also, at the same time, the EMA is gonna go up, this 100 EMA, so we're gonna have to see the timing with that as well. But the most likely is going to be the 61.8. So that's usually how I will filter out different prices with my fib and also with the round number, the psychological numbers, okay? So let's see what happens next. So price is going down. We have some sort of reaction on the 38. Okay, so we have a reaction here, okay? Some traders entered at this price. Was this my best possible price? No. If I currently I'm in 4 hours. So if I saw this, these two 4-hour candles, so about 8 hours, would I smash my keyboard and say, oh my God, I missed my trade, price is gonna run up now and just leave me? No, I'm just gonna say, well, didn't reach my level, so you know what, whatever happens, and as long as I'm not, at my best possible price, I don't care about the trade. So let's see what happens next. So we have a reaction on the 50 EMA, rejection, and you see this candle here, we're technically breaking the low at the 38.2, the low that was just here, this support is broken. So that shows me that the market is going to push lower. The EMA is already a little bit above the 78.6, so in my opinion, the 61.8 will be the proper level to enter the trade at 1740. So now I'm just waiting patiently for my 61.8. My 100 EMA basically is coming soon. Oh, we have this big reaction here on the 38 again. We're going all the way up. Did we meet my optimal price? No. Am I in the trade? No. Okay. So if we advance the price again, we see what's going on. Boom. What really happened here? Well, we had the liquidity hunting. We have a liquidity, basically a stop loss hunt. Okay, so we technically made a lower low here from this low here. Market rallied up all the way here, made a higher high, broke this level, went all the way to 1763, and some traders were excited, decided to enter on this movement. On the very next candlestick, boom, reversal, and the next one, reversal, lower low, okay? And just like I said previously, you always want to wait for the best possible price, okay? Because if you got excited and you entered at the 38.2, yes, maybe you had a good initial reaction. But at the end of the day, if your take profit was higher here or even higher, if you're looking for a big swing, a big long on your fundamental idea and what we discussed about the DXY at the beginning, well, at this moment, you would be in negative. You would be in drawdown and maybe you would even get stopped out of your trade, okay? Depending on how big your stop loss is. So that's why we always want to wait for the best possible price. And even if the market looks like it's running away from you and you have that urge, that fear of missing out the trade and just entering late without, following your trading plan, that's where you make mistakes, that's where you lose money, and that's where you lose your profitability, okay? So you always want to make sure that you wait for the best possible price. So now we're getting very near our 61.8. It's right over here, and we have our EMA at this price, so everything looks fine. We touch our level, perfect, we enter the trade. Okay, boom, right there, you enter the trade. You could either put a buy limit or just do a manual entry depending on your preference. It doesn't really matter. I would say if you put a limit order, you would need more experience in the market. If you want to just enter on a regular manual order, that would be more reasonable for someone that is beginning. Okay, so let's say we entered at 39.50. Let's say I put a buy order there. My stop loss now, let's put it, I would say under these lows around here. So I would put it maybe for 40 pips. Okay, so let's be precise. Let's put it 40 pips. Just like that. Okay, 40 pips over here. And then our take profit, well, we have a few choices for the take profit. Okay, we have my minus 27 here, but it's a bit in the middle of nowhere. I have my minus 61.8 extension, which is right at this resistance, and then I have my 100 minus 100 level right at this 50 MA near 1800 good psychological level. So my two choices for my two take profits would be here and here, basically. Okay, so usually what I like to do is just put it at the furthest take profit, this one here, and if I see the market reacting here and not going straight through, well, we just close it early at this price. Okay, but generally I will just put it at the best possible take profit, at the furthest take profit that is reasonable. Of course, I'm not gonna put it all the way over there, but if I have a reaction on this obstacle here, of course I will close the trade. If price is going there and we react, yes, I will close the trade a bit early, and it should be fine anyways. Okay, so here we have a risk reward ratio of 14.29, which is amazing, which is great. 571 pips. Even if I decide to close it earlier here, we still have a ratio of about 10, 420 pips. Again, amazing opportunity, amazing trade. We waited for the best possible price. Price was met. Institutions made a stop hunt, made a higher high, then came back, found the right price, and right now we are at basically the reaction moment, the initial reaction moment. And if we look at the DXY, when we had this this movement here going down, DXY was going up. Okay, so nothing really special here, just a normal reaction, normal flux of USD going in from gold to other pairs, whatever. So nothing too special with DXY. So let's see what happens next. So boom, we have reaction straight on the 61.8. Okay, clean reaction, no hesitation. Just like I said previously, gold is very reactive when we get to the right prices. So as soon as we touch the 61.8 after this stop loss hunt and this whole zone here, we created liquidity for the institutions. All these guys that entered long, they pretty much all got stopped out at the end here at the bottom, and that was useful to create that instant reaction. So as soon as I see this type of reaction, I'm very excited. I know that my trade is very good. Okay, so now what I would like to see, I would like to see a price going above this resistance here, closing in this area, and then I will adjust my stop loss. Okay, so you want to always make sure that you move your stop loss to break even, or at least reduce it, to ensure that you're always protected if things go wrong, if something happens, if a fundamental event happens. You want to always want to protect yourself first. Okay, so I would even say that in this situation, since the reaction was so pinpoint on the level, and actually I could adjust my fib with the new high here just to be a bit more precise. So the reaction was so pinpoint that my stop loss, which was 40 pips, I'm just gonna divide it by 2. So I'm gonna put it at 20 pips. Okay, just to be precise, 20 pips. Okay, so if I risked 1% or 2%, now I'm 0.5 or 1%, so halfway risk. And the reason I'm not going to put it break even right now is just because sometimes when we have, the first reactions, sometimes another group of institutions are looking at this reaction and they also want to get their entry, so we might see a retest, a double bottom. The MA is still very close, so I just want to give a bit of room to breathe in case we come back a bit later on. It happens very often, because when we have this type of reaction, not everyone is here. Okay, sometimes it's about 40% to 60% of the the big boys that are entering, but another group that was looking for an entry as well might see this reaction and say, okay boys, this is the good price to enter, let's bring the price back and let's enter as well. Okay, so that's why I don't want to put it to break even right away, but I will put it to break even once we break the resistance to the upside. So let's see what's going on. So we come back a little bit, a bit of consolidation. Okay, price comes back to the 50. 45, so about 50 pips above. Let's just stretch the fib like this. In this period of time, this small consolidation, we see that DXY was going up a little bit as well. So basically from, let's say, here to here, this zone over here, DXY was basically going up while gold was going up. So you see these two are going in the same direction. Something is wrong, something is not working out. It means there's a manipulation one side or the other. The manipulation will be in this case from the DXY because there was just some institutional groups that were manipulating the price, making a consolidation to find an entry point and then finally execute their idea. So you see it right over here. We reached the 100 EMA on the XY, and then we had this big reaction, and then the movement will continue. So once again, it gave us DXY gave us the ability to see that something was going on and not to panic if we were in the trade here, if we saw this consolidation, and basically that there was some sort of manipulation. It's not always going to give you the exact reason why there's a manipulation. It's up to you as a trader to find the reason, to build a storyline, to understand what's going on. So in this case, I'm not going to say, okay, DXY is consolidating to the upside, so gold is going to go down. I'm going to say, okay, there's a consolidation here because there's a manipulation here to find other entries to execute our idea, because the institutions already showed us their intention to go long. Okay, so now that we have broken the resistance here, stop loss break even straight away, so risk free. And then if we see what happens next, we are getting near our resistance. Okay, so we touch our resistance here. We have a small reaction, but it's not a heavy reaction. So I'm gonna wait for the next candle to decide if I close my trade at this moment. So okay, boom, resistance broken, minus 61, because we adjusted the fib is now a bit higher, has been broken as well. And then finally we get to our take profit 1800, but we exited at 96.75, let's say. Okay, so that's a clean 571 pip trade with one single position, no extension, no adding of a second or a third position. I just kept it very simple for this example. We waited for the best possible price. You saw how the market played with the liquidity and with price by rejecting a bid at 38, going above, giving the impression that we're pushing higher, coming all the way back to the best possible price, 61.8, having a reaction with our confluence area, 1740, 61.8, the EMA 100, okay, not even touching the support. We adjusted the stop loss to 40 pips to give enough room. Then once we had our reaction, we put it at 20 pip, so we cut our risk by 2 just to protect ourselves. We had a bit of consolidation on the XY. Okay, there's some kind of manipulation, there's some kind of positioning, but nothing too serious, because if you look at the DXY, it's a bit of a consolidation as well. Then we broke this resistance. Okay, at the end of this candlestick, stop loss break even. We waited here to see if the resistance, if we're gonna have a solid reaction, or no reaction or a small reaction. In this case, we had a small reaction, then we broke above, so we kept the trade, and then we exited at the top. Okay, so step by step, that's exactly what happened. And on this candlestick, when we broke the resistance at 1767, that was the big candlestick here on the XY as well. Okay, that was this big candle, this one that closed here. So from the end of this candle, if I wanted to add another position, I could have done so right over here, put my stop loss to break even. So basically from this position to this position, I would have found the halfway point, which would have been, if I measure it from here to here, that's 290. pips, so it's about what, 145 pips. The stop loss break even, so let's put it at 150, even 160, a bit of on profit. So right over here, somewhere around here, I would have put my stop loss if I had my entry here and a second entry there, and then I would have made an extra from here to here and an extra almost 300 pips. So my total would be 571 plus 300, so about almost 900 pips on this trade. Okay, so that's basically how you use all the different tools and how you build the best possible trades. Okay, if you do just one trade like this per month, okay, you just do 900 pips and you risked 1% on 40 pips. Okay, and if I do the calculation real quick, 900 divided by 40 pips, you made 22.5% of your account. If you have a funded account of 200K, okay, 200K times 22.5%, you made 45,000 on your 200K funded account, which is amazing, which is great, with just one simple trade. So once again, it's about quality, it's not about quantity. You want to trade the best possible trades possible at the best possible price with the best possible confluence. Even if you make 1, 2, 3 trades per month and they're good quality trades, that's all you need to grow your account. Okay, and that's why also we're trading gold and Dow Jones US 30, because those types of moves, 400, 500, 600 pips, are happening. And if you're trading other currency pairs like Euro USD, it's a bit more difficult to have a straight 500 pip move on a short period of time. If you look at this trade from here to here, the trade lasted 2 days and 16 hours. Okay, and we made almost 600 pips on one position, and then if we added the second position, would have been 900 pips. So anyways, you get the point, you get the example. Always quality before quantity, and that should be your philosophy in your trading.